Every payday, 27-year-old marketing associate Evelyn Matumbakal sets aside a portion of her salary for investing. She's not into risky startups or volatile crypto. She actually prefers companies she sees every day. One of them, she says, is 7-Eleven.
I always pass by the 7-Eleven on my way to work. It's open 24/7. And there's a lot of people coming in and out. So I thought maybe that it's a good stop too.
7-Eleven is a household brand in the Philippines. In the early 80s, Philippine Seven Corporation, or PSC, brought the brand to local shores, opening its first store in Quezon City in 1984. 4 decades later, the brand has become part of everyday Filipino life, offering convenience on every corner and driving one of the country's most recognizable retail networks.
Together forever, 24/7. Tara, 7-Eleven!
7-Eleven's business model runs on one simple promise: convenience. Its value proposition lies in accessibility, fast service, essential products, and a trusted brand available 24/7. Behind the counter, key activities drive this machine: franchise management, supply chain coordination, and product innovation. From hot snacks to digital payments, every move is designed to keep customers coming back. Like every industry, the pandemic challenged 7-Eleven. In 2020, as lockdowns gripped the nation, 7-Eleven felt the weight of the crisis as its net sales dropped to 44 billion pesos, a reflection of a country in pause. But this story isn't one of defeat, it's about resilience. By 2021, the brand began to recover, reaching 45.4 billion pesos, then soaring to 63.4 billion pesos in 2022. In 2023, the momentum continued with 79.1 billion pesos, and by 2024, a new milestone, 90.1 billion pesos in net sales.
I'm in beast mode, hit it west to the east coast, stronger than superheroes.
In the world of convenience retail, numbers speak clearly. 7-Eleven leads the pack in retail sales value, surpassing competitors like Alphamart Philippines, Uncle John's Philippines, and others.
Based on reports, PSC still dominates in the market with around 86% shares among its competitors, despite industry risk and the rising competition.
This isn't just market share, it's trust earned day by day. 7-Eleven's market resilience and leadership are the things that attract potential investors like Evelyn.
O anak, dating gawi.
Sa paborito nating kapitbahay?
Siya si Tatay Albert, ang aking superhero. At dito ang aming dating gawi.
To help potential 7-Eleven investors like Evelyn, a Cebu-based investment consultancy, H&H Consulting, released a study on the growth trajectory of PSC. The method used in their study is called breakdown sales modeling, a data-based approach that begins by mapping out how many stores the company plans to open in the coming years. In October 2024, PSC was eyeing an additional 500 stores in 2025. That would bring its total store count from 4,130 in 2024 to 4,630 the following year. Then, in July 2025, PSC was targeting 5,000 stores by 2026.
7-Eleven is actually eyeing to reach around 5,000 stores by the end of 2026. It will focus more on expanding to Visayas and the Mindanao regions. They really had a study here showing that a strong demand on this one.
Beyond 2026, PSC hasn't disclosed exact figures, but the consultancy turned to the company's 2025 second quarter report, which mentioned plans to open 400 to 500 stores annually. Taking the conservative estimate of 400 new stores per year, H&H projected 5,400 stores by 2027, using that figure as the basis for the following year's calculations.
Quality service and store expansion has been the main focus of PSC. And over time, PSC 7-Eleven stores gained recognition for the quality and customer appeal, which is matched in global standards in the convenience retail industry.
Experts say that 7-Eleven sales reflect and depend on everyday Filipino spending.
Philippine Seven Corporation exemplifies the everyday spending habits of Filipino consumers, characterized by small but frequent transactions. When we talk about PSE, we're essentially capturing the rhythm of daily economic activity in the Philippines.
It's a classic consumer play. You're buying into the spending habits of Filipinos.
When it comes to sales, the consultancy examined PSC's financial reports from 2020 to 2024. By dividing merchandise sales each quarter by the total number of stores, they estimated how much each 7-Eleven branch typically earns. Using the average annual growth rate, the sales per store were forecasted and further based on the company's target number of stores. 2025, 2026, 2027, 2028, 2029.
It's a market leader, has consistent revenue growth, and continues expanding geographically.
H&H Consulting notes that this steady store expansion, combined with consistent per-store performance, reflects a scalable and resilient business model.
It's steady, it's dependable, and it's always in demand.
The rising sales from opening more stores signal a healthy demand and wider market reach. However, growth also means the company will need to spend more in the short term to buy more inventory and manage receivables for its expanding network. In other words, cash will move faster now, but it's being used to support bigger operations. Over time, this investment in growth is expected to pay off through higher profits, stronger market presence, and lasting business stability. When we talk about investing, numbers can sound intimidating, but they all tell a simple story about how a company grows and rewards its investors. 7-Eleven's price-to-earning ratio is expected to settle at around 35.9 over the next 5 years. This figure is based on the average P/E ratios from 2022 to 2024, a reliable measure since the company is already mature and well-established. A P/E ratio of 35.9 means that investors are willing to pay about 36 pesos for every 1 peso the company earns in profit.
Yeah, that number might sound a bit high at first, but it can also mean that it has strong market confidence.
While slightly high, this reflects strong market confidence in 7-Eleven's continued growth and expansion.
It also tells us that 7-Eleven isn't a risky newcomer anymore. It's a mature and trusted brand with a proven business model.
PSC's financial outlook continues to strengthen over the next 5 years. From 2025 to 2029, PSC's return on equity or ROE shows a strong upward trend. In 2025, it starts at 5% in the first quarter and climbs to about 50% by year-end, showing better profitability and efficient use of investors' money. The same pattern follows in 2026, rising from 5% to about 55%, reflecting steady growth and improving operations. By 2027, PSC's ROE reaches nearly 61%, continues to 67% in 2028, and peaks at 74% in 2029.
What we're really seeing here is really promising, So, PSE's return on equity jumps from just 5% in 2025 to about 74% by 2029. That means that the company is not just growing, it's getting smarter at using investors' money.
Overall, the steady rise in ROE means PSC is becoming more profitable each year and delivering strong returns for its investors. A clear sign of solid financial growth and stability.
For anyone looking to invest, this kind of steady improvement is really a good sign of long-term strength.
PSC's debt-to-equity ratio is expected to start at 1.5 in the last quarter of 2025 and rise to 2.5 by the end of 2029. This means the company borrows 2.5 pesos for every 1 peso of its own capital. The growth of this ratio is based on the average quarterly changes from 2022 to 2024, since PSC is already a mature and established company. Using the average makes the forecast more steady and realistic.
It actually shows that they are confident about expanding. As long as sales keep growing, which they have, that borrowing can really boost returns for investors. So yeah, it's a sign they're taking bold but smart steps toward better growth.
A higher ratio may seem risky, but it shows confidence in expansion. If PSC's sales and profits continue to grow, this leverage can increase returns to shareholders. However, if growth slows down, it could strain finances. Still, with PSC's focus on expansion and strong past performance, the outlook remains positive.
Nobody do it like this. Nobody do it like this. Nobody do it like this. Ain't nobody do it like. Ain't nobody do it right.
As the numbers reveal, 7-Eleven's story is one of steady growth and strong investor faith.
If you believe in the strength of everyday economy, built on staples like rice, coffee, and convenience, then Philippine Seven Corporation is definitely worth watching.
A price-to-earnings ratio of nearly 36 shows that confidence. Investors see a company worth paying for, one that continues to deliver. Its return on equity climbs year after year, a sign that 7-Eleven isn't just earning more, it's using every peso of investment wisely. And while taking on more debt may sound risky, for a company built on expansion, it signals ambition. The drive to grow faster, reach further, and serve more.
I think investing in Philippine 7 makes sense this year because it's one of those businesses that stays steady even when the economy is shaky. People still buy food, coffee, loads, and basic stuff no matter what.
For analysts, it points to a company that continues to grow sustainably, making Philippine Seven Corporation a credible long-term investment prospect in the country's retail landscape.
That's the kind of business that doesn't really go out of style.
We showed Evelyn the study of H&H to see how useful it is to inform her decision.
I still trust the company's model and brand, but now I understand why. I'm keeping an eye on how it manages, adopts, and grows digitally. That's what makes it worth investing.
From its glowing green, red, and orange signs to its rising numbers, 7-Eleven has always been open 24/7. Open to change, open to growth, and open to those who believe in its story. Now, will you keep your mind open to investing?